Good morning, traders. I'm hoping that your weekend is going well. And we are going to take a look at US oil. I think there's an opportunity uh, right at that. We're right there. We are right there. Okay. Let's take a look. Breakdown from the monthly. We can see price has, made lower low, lower high, lower low, lower high, lower low. Where's the last break of structure? The last break of structure is to the upside. Right here. Okay. And what does that mean? That indicates once price breaks structure, especially a bullish break, that price will likely to continue higher. All right. Doesn't mean it's going to go, you know, from here to the moon. All right. That's not the way structure works. You have to work within structure. So what are we talking about? We're talking about after making lower low, lower high, lower low, breaking this lower high, we made a higher high. So what are we expecting? We're expecting price to make a higher low and then a higher high. But this would be a very shallow pullback here. After a break of structure, what we expect is a return to impulse. A return to the demand zone that impulse price up in the first place, to this order block. Oh, this bullish order block. All right. We have uh, buying orders here. We have buyer orders here. We have buyer orders here. But we're talking about a return to the origin, to uh, the origin of the impulse. All right. Now, that could be way down here. Okay. And that's a long ways off. So there's really no reason to talk about it. But what we're trying to get is a bigger picture view of what price might intend to do on on this higher time frame. The the intent of price is to continue higher, but there will be a pullback after such an impulse, right? We expect that. And this would be the first stop of this train, all right, here. Now, that are we sure that price is finished making the higher high? Why can't the higher high be up here? It could. It could very well be. All right. What we look for is after a break of structure, whether it's to the upside or downside, we look for price to transition from bullish momentum to bearish momentum. All right. That's how we'll know when it's finished. When it's finished making that higher high, when it's established that higher high, and then we can look towards where it will make the higher low. Okay. And uh there's bullish bearish supply up here. There's bearish order blocks that price is heading towards. All right. If we look at let's see here. If I can just find the right one. Bearish, bearish, bearish. All right. Let me see. No. No. All right. Boom. There you go. We have an imbalance here. This is the inefficient move of price. What does that mean? It's all bearish. It's all sell orders. Price doesn't usually like to leave. The markets don't leave these imbalances like that. All right. If it's all one side of sells or one side of buys, price will come back up and fill in all of that what some people will call a fair value gap. See how it came back here? So the inefficiency was uh, resolved here, and then price came back a little higher. All right. The gap was filled in more. All right. This is a correction of an imbalance. Price likes balance. Price likes equilibrium. Equal numbers of buyers, equal number of sellers. When it's imbalanced, it will come back to balance it off. Look how high I got here. All right. But this is one of the factors that moves price, that attracts price like a magnet. And right above that is bearish order blocks. All right. And that when you see imbalances right before an order block, price is probably there's like a high probability that price will go to mitigate that the orders in this order block. All right. And uh, the imbalance is an extra confluence that says price is probably going to continue higher. All right. Doesn't mean it's going to do it immediately. It does it at its own time. All right. Bear that in mind. Right? If we could time the markets, everybody would be rich. But it will eventually get up there, and we know that there's a high likelihood that it will do so because there is imbalance, and then there's an unmitigated order block, an untested supply right up there. Okay, so we're making our way up. All right, that's what's happening. Just look at it this way. Here, when we had this break of structure, this major structural point here, we had a break of structure here. That means price will eventually return to impulse, like I said here. All right. And what are we doing? We're getting higher, low, and then we're getting higher, returning right to the original impulsing order block. It works the same way on the flip side, where it's bullish. We broke this major structural point, and we're looking for price to eventually come back to the order block that originated this impulse. Okay, that is the big picture. All right, let's go to the weekly. Do we see anything different on the weekly? Where's the last breaker structure? Here. All right, the last breaker structure to the upside. So we expect a return to impulse. You see this impulse here? We expect price to come back down. All right, we expect price to make a higher low here, and then take off that balance out that imbalance and test that order the supply here, and then we would think that price will give us a transition up here from bullish to bearish, and then start making its way down to up to this order block here. All right, in the distance. Okay, let's look on the daily so we can see the price action up close and personal. All right. I like the way things are looking here because, all right, what do we see here? We see buy side liquidity being built up. All right, that's important to note. Let's go to the 4 hour week where we can see it a little more clearly. All right, let me just tell you how this thing works. All right, what price does, what market makers do, is manipulate and build orders. Right, uh, you see, it establishes the low, establishes these highs, and people are taking um, longs from up here. They're waiting for a breakout trade to take longs. All right, so they have pending orders for longs here. They also have stop losses for people who took these shorts. All right, so this is the buy side liquidity here. Also on this side, we have sell side liquidity for people who took longs. There's stop orders, stop losses here, right? And we also have people who are waiting for the breakout with pending orders for shorts. Boom, 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 boom. Right? So what does price do? Destroys all their dreams, gives them a taste of profit, and then comes back up and takes them out of their trades. Gives them a taste of profit, and then comes out with a break with this break of the low and destroys their dreams. Just takes them out of the trade. All right. The low, but these are liquidity points now. All right. These are liquidity points. All right. What does price do? Builds up those liquidity points, builds up liquidity points here, and then does the sweep. Goes high, takes out everybody here, and then comes low and takes out everybody here. You understand how this works? They need this liquidity to make the bigger move. Now, where's the last break of structure on this 4 hour time frame? The last break of structure is here. All right. See that low broken? Uh-oh, that means price has a high likelihood of continuing lower, right? Then we take out the liquidity. We hunt the liquidity. If you see equal lows or equal highs, relative equal lows or equal highs, that is a liquidity pool that price will make its way to, because that's what moves price: liquidity, right? It comes down here, and this is a technical break of structure. So what does this mean? It means that price is going to return to impulse. I keep telling you that. Where's the impulsing order block that brought price to break these lows? I just circled it right here. So price returned to it. And that's where we are right now. Is this a good time to look for buy sells? I'm thinking so. To be honest with you, I'm thinking so. All right. Now, is there a chance that price will continue higher? There is a chance. This you make sure you always have a invalidation point. This is the invalidation point for me. All right. Now, this is the if price breaks that high, all bets are off for shorts. All right, because this is a a pattern that I look for in every trade. I look for price to transition from bullish to bearish momentum. Right? I look for this. I look for this pattern every chance I get. It's a head and shoulders or a quasimodo. I look for price to break the lows, come back, create that right shoulder, and uh, I look for the test of that right shoulder. It's a very simple pattern, right? But you see it on every time frame. So I'm looking for this. All right. Now, some people are going to say, no, this isn't a head and shoulder. This is a quasimodo. Same thing for me as far as a high, a higher, a lower. And I'm looking for that right shoulder. All right. A lot of times, let me make sure that's straight. Get off of me. All right. A lot of times, price will come back and test the order block for the head, right? Like it did here. Comes back, but this is too shallow of a pullback for me. I don't trust it. But once it broke the low here, then I started to trust it a little bit more. But I like to see a break of structure and a return. I like to see this daylight here. I want to see a daylight move where it comes back and tests that right shoulder or test the head. Didn't give me the daylight I like here. This was too shallow of a pullback. But for the right shoulder, it came back and tested there. These are my entries. This the safest of entries. The testing of the head is a more aggressive head entry because price could do one of these numbers. It could come down and do that, and you say, oh, I got a head and shoulders. You know what I mean? But it didn't break this low. It didn't break this low. And it could just turn right around and make higher highs. There's a 50-50 chance of that happening, depending on other factors. You're looking for confluences and stuff, right? So uh, you want to see that test. You want to see that daylight. You want to see price go away and come back, right? I'm looking right here. So on the lower time frames, I'm looking for an entry, and I would suggest that you look for an entry. And uh, and that's just a suggestion. I'm not an expert. I'm not giving financial advice. All right, this is education. This is a scenarios that I'm gonna play on, and if it agrees with your own analysis and your own trading plan and agrees with your strategies, hey, I think you should go for it. Oh, I should point out there's buyer side liquidity up here for price to one day. come back and sweep. Price could go higher once it starts going to make that higher high, right? And fill in this imbalance up here and go and test that order block that's above, all right? But it doesn't mean it's going to do it today. We've already had a break to the downside, to the bearish side. So I'm looking at the probabilities. The probabilities are higher that price will continue lower. And that's what I'm looking for. And that's what I'm sharing with you. I hope that you've learned something during this video, and please make sure you leave a like if you did. All right, that will encourage me to make more videos. And I appreciate your feedback, whether it's good or bad, critical or not. I appreciate your feedback because I am growing. I'm on my journey too, and I'm learning along the way. And if there's something that I could do better, I would like to hear it. And if there's something that I am doing right, I'd like to hear about it. Okay, I will see you in the next video. Trade safely.